let me hand over to yourself, Declan. I guess we wanted the next slide here. You'll take the first slot and I'll take the second, I guess, and we'll finish off with some Q&A at the end of it.
That sounds good to me.
Great. So without further ado, let me move onto your slides here.
Before we move on to the next one, and I'll give you a shout when that happens, Keith, and thank you very much. I'm looking forward to this morning, and I hope that everybody who's in attendance is as well. And I suppose what I want to do really is just share some of my ideas with people. We have, lots of ideas on credit. And I think best practice is something that should be important to everybody working in the credit management field. And look, I know there's only 15 minutes, so I'm going to move fairly quickly and I'm not going to bore you. But I suppose the first thing that I'll say is so many people, when they talk about credit management, they think it's just about collections. And I suppose the first thing I want to get into people's minds right now is the credit management is far more than just collections. The collections is an important part of it. It is much more. And if we're to do it properly, then there's lots of different considerations that we have to take into account. And that's really what I want to share with people today. So if you move to the next slide, here's the three things that I want to cover. So just in terms of where does credit begin? So we will have a quick poll on that. I want to look at the commercial reality because for too long, credit is seen as just an anti-sales function or whatever. So we need to look at the commercial side. And we also need to look at what I call my attack model, which is a 6-step plan for credit that I want to share with you as well. So just that it's come up on the screen, there is a poll there. So if anybody wants to just click on one of the buttons there on the screen and just let us know where you think or where does credit begin for you in your business. So is it as soon as it gets overdue, it goes into the call cycle? Is it when there's a balance, when the sales be made? At what stage does credit kick in for your business? So if the participants now can just click a box, you can probably see the responses coming in, Keith.
I can see them coming in here, Declan. Yeah, we'll give it a couple of seconds. They're still having a think, if you like. But
so if anybody's having a think now, just pick one, and we're not going to pick on you. It's all right. Even if you get it wrong, you're fine.
Exactly. Yeah, great. So I'll tell you what. Shall I? No.
But just tell us what is the most popular answer.
Yeah. So most popular at the moment is after the sale has been made. Which is probably where my mind was before talking to you during the last couple of weeks.
And that's why people come along, Keith. You see, hopefully I want to change their minds. And again, and that's why this poll, I think, is so important. And what happens in most cases is that's where people think credit begins, after the sale has been made. And this is your first lesson from this morning in terms of best practice, because my answer is the last one. So it's before the first sales call. It's before anything happens. There was a look at, so where sales been made. So yes, so there was, somebody said before the first sales call, which is great. So guys, when it comes to credit, if you want to become part of the business, if you want to be an integrated part of the overall management of the business, you have to get involved. And there's so many rows with salespeople if they come in with a new account and it's not opened. That's when all the rows happen. If you have the conversation in advance, show us what leads you're chasing at the moment. Give me a list of the companies. I'll do a quick vet of them and let you know which ones to invest time in and the ones not to invest time in. And that means everybody is working for, and this is for me, the definition of credit is about profitable sales. So the earlier you can get in on the process, and if it's at sort of prospect stage, do your initial credit vetting, check out everybody, give them a steer as to who to go after and who to avoid. And then if there's no time invested, then the rows are lessened. So start right at the very start is my advice to you. Now you might think, look, we've so much work to do. Absolutely. But by doing this preparatory work, we're talking about best practice. And we do not want salespeople wasting their time going after customers that we would never open an account for in a million years. So that's just the first bit of advice. So the earlier credit gets involved, the better it is for everybody. So that's the poll, and thank you everybody for contributing. Look, what you've answered is what your answer. Hopefully what I've said will maybe change the way you think and the way you do it. So if we move on to the commercial realities now, so absolutely, can I just tell you, credit must be sales focused. One of the best definitions I've heard of credit is that credit is the completion of the sale. So the sale starts with a lead that I've already pre-vetted, then moves through the order process and the order I've already approved. Then it's invoiced, and hopefully the invoice is correct. We'll talk about that later. It goes to the customer, it's paid, hopefully on the due date. And if not, then the collection process kicks in. The completion of the sale is when the money is in the bank. And I've always spoken about credit should be all about profit. We are the guys who turn sales into profit. We are the guys, we are the profit generators for the business. And there's no point in talking about best practice if you haven't got the mindset of the best interests of the business at heart, and you are there to make sure that everything runs smoothly, that the customers are happy and paying and continue to buy. That's what credit is all about. It's also about protecting the company who's paying your wages, because making sales to people who have no intention of paying is not a good use of anybody's time or resources. So having a credit controller who's commercially clued in, who is sales focused, the advice I give people is that the job of credit is to find a way to deliver every order. So you find a way. So it may not be given credit, it may be cash up front, it may be cash on delivery, it may be secured, it may be, there's 1,000 different ways. The job of the credit professional is to find a way to deliver every order. So that's what it's all about. And then rather than having credit as the end of the line focus, you know, when the invoice pops up on the account, you know, if we're involved at every step along the way, that means the credit is there, it's an integrated part of the business, and the whole thing flows from marketing through sales, through billing, through credit, through collections. The whole business just flows. That's what we're talking about. And when we're talking best practice, you know, to have that seamless flow through the business. And I know, Keith, you're going to be talking about automated payments as well. That's very much part of that seamless flow that people should definitely consider to make sure that everything in your business happens as it should. So that is that. So if we move on very quickly, because time is flying, this is my non-violent attack method. So I have no time for any form of violence, and I know attack can be seen as maybe an aggressive word, and there's no aggression in there whatsoever. Just that's how the cookie crumbled. So here are the 6 things that you must take into account. So the attack model, and I just let you know as well, this attack model forms the basis of the credit management module in the diploma in credit management that we run. And we get into these topics in far greater detail and more into the how to. You know, in 15 minutes, I can only give you the top line. If you're interested in finding out more, obviously we'd love to talk to anybody who's interested in doing the diploma. So this is, and that's just the credit management module. You know, we do risk assessment and international credit and law and other things as well. And collections is a specific module. So just from a credit management perspective, number 1, assessment. Guys, you have to have some form of assessment of customers. Because like at the end of the day, the fundamental of credit is that credit is trust. And I have to know, who am I trusting and how much can I trust them with? And that's part of, as I say, what the risk module covers, that we need to know these things. And just taking a blind flyer on a stranger that you've never met before will always end in tears. And to me, credit management is not about tears. It's certainly not. It's about no surprises. So assess your customers, make sure they're credit worthy and worthy of your account. And you can have your own criteria for doing that. And I would advise it as well, rather than just believing agency reports, although they're part of it. Terms and conditions. these are the rules that we run our credit department by. You have to set out your terms and conditions, and people copy them from other people, and they, look, it's and they've no idea, they've never even read them. So read your terms and conditions, make sure that they serve your business, and they're a clear roadmap as to the rules of how you do business. And also within terms as well is payment terms. So stop this 30-day nonsense. You set out your terms in terms of what day you expect the customer to pay. And there's no ambiguity. You take as much gray out of it as you can. And, this 30 days, like what's 30 days? Is the 30 days from date of order, date of delivery, date of dispatch, date of invoice, end of month following invoice? What is it? And the customer will think it's the longest and you'll think it's the shortest. And then you've created an area for fighting. And let's not fight, because one of the rules is you never fight with your customers. So let's not do that. So having clear terms and conditions, clear, enforceable and enforced credit terms will help set the credit department on a even footing. And that is that teamwork. Guys, you have to work with people. Credit controllers tend to fight with a lot of people, including sales. And I would have fought with a lot of people myself in my career. Look, we need to work with them for the betterment of the business. So you have to be the go-between, because you're between all the other departments. So your job is to communicate to make everything work smoothly. Admin, get it right, get your invoices right, get them out on time, have the right prices, the right quantities, the right deals, the right everything, get them on the right desk at the right time as quickly as possible. You're going to be talking about, the direct debit system, which is brilliant. And I loved it every day of it, which is fantastic. But look, allocate your cash, post your cash, make sure that the balances on the account are correct. Right first time is the only way to do your administration. Then collections. So have a collection process, a funnel, a system for collecting money, that nothing gets left behind, nothing. And you have this determination that you're not going to leave the money behind, and every penny counts. And you have a system for collecting every single penny and no exceptions, because that money, that's the profit. That's what it's all about. And that's the job of credit control, to make sure every penny is collected. Then we have our key performance indicators. So these are our reports. This is how we keep the score. And most people do this all wrong. They focus on DSOs, and they focus on overdue debt, and they focus on horrible things that are so wrong, because key performance indicators, what we report on is what gets done. And I have to make sure that what we're reporting on is what I want done. So that is an overview of the attack model in about 4 minutes, if you want it. So that is the 6 things. So if you want to do it, we start credit right at the start, before a sale is even made. Make sure that we're dealing with credit-worthy and people that we're happy to do business with. Then we have a sales hat on to make sure our customers are happy. Now, they're happy, but lads, these are the rules. This is our terms, this is our business. We'll supply you with goods in August. You have to pay us on the 28th of September. Are you happy with that? I'm happy with that. I get my invoices out right. Then we take the correct amount of money on the correct day, and the relationship flourishes. And that's what it's all about: building relationships, getting on with people internally and externally. And if you aspire to best practice, I know 15 minutes, I could talk about this for 3 weeks and not repeat myself. I'm hoping that will give you enough of an overview, and maybe even an appetite to come back and talk to us about education or training. If we do that, then we're going to, prosper. If we don't, then we're going to find our companies getting into cash flow trouble. And like right now, yes, we're all awash with money. Money is cheap and can be borrowed. It's the businesses who look after the money now are the businesses that will survive and thrive into the future. Because I've been around, I've lived through a few recessions in my day, and I know that there's a cycle, and this sort of cheap money cycle will come to an end, and this borrowing will come to an end. And someday, not only will we have to stop borrowing, we'll have to start paying it back. And anybody who's ever worked in credit knows that's when the fun starts. Keith, that's all I have to say on the topic. My 15 minutes are up. But look, if anybody's any questions they want to ask me afterwards, I know you're going to go into your stuff now. So just take a note of your questions and I'm happy. And if you want to contact me directly, Declan at icmt.ie is my email address. And that's my mobile number there as well. So if you want to give me a call or drop me an email, I'm happy to answer any questions you have, and particularly on the education and training. So back to you now. Thank you.
Declan, very good. And I guess I might as well add, from speaking with you over the last couple of weeks, in the run up to this webinar, I've learned a site as well around best practice in credit management, things like where does credit begin and stuff like that. So it's been really good for me to get a better rounding of credit control. We're in the business of providing a service, obviously, that helps people in that space, but it's great to get a proper rounding. So I've enjoyed that, to be honest with you, over the last while. So I'm just going to set a clock here so that I don't run over and keep it tight. But so look at, again, for people that don't know me, Keith Harrington is my name, and I'm the MD of DebitPay. We formed the company a number of years back. So it's a fintech company that helps businesses get paid on time. That's the way I'd sum it up. If I move on, then the focus of this next couple of minutes, three things I'm really going to focus on: the value of automated collections, give some real examples, use two examples of our customers that are gaining from using the system, and then reconciliation, that last thing. I used to talk about it enough, but I found out actually working with customers, the value of it, right? And making that simple for businesses is a key thing in credit control. In terms of the value of collections, then three things I look at here. The reducing, you mentioned that horrible metric of days sales outstanding, Declan. I guess keeping the debtors book to a minimum is really what we're looking at here in automated collections and recurring payments. So I look at that very quickly. Then time and cost savings, less time chasing payment. So this is a common part of the problem statement when people talk to us about what we help them with or recurring payments. Spending time and money and resources chasing people for payment, be it monthly or weekly or whatever the period is. And then the last one, I won't dwell on it. I haven't got a slide for this, but really, really simply to give you an example. A couple of customers, two customers came to us probably about 6 or 9 months after putting in the system and getting recurring payments and automatic collections working. Their story was very similar in that they kind of said, Keith, we didn't think this thing was going to work for us when we put it in. We tried it, but prior to getting it in, they were spending a lot of time every month, maybe a day and a half on a monthly basis, calling people, chasing people for payment. That customer care calls in, how are we doing? Can we get some payment on outstanding invoices? And the goal of that was to pay the wages, a portion of the wages at least. So it was great to hear from them in a roundabout way. The story was the same in that after about 6 or 9 months, they had enough money coming in on recurring payments that they didn't have to worry about meeting the wage bill, or certainly half or 3/4 of it. And that gives a huge amount of peace of mind space to focus on other things. So just thought I'd mention that because it is a real thing that happens to people when they start automating some of their processes, some of their collections. So in terms of value of automated collections, in our business, as it grows, there's more demands on more sales, more operations, there's more staff, there's more resourcing required in the business. So the needs in our business continually grow as we grow. And with that, quite often, without automating the collection side of it, the debtor book grows as well. And with that comes the challenge of chasing people for payment and chasing customers for payment and getting the excuses sometimes, and then having to chase them when the payment didn't arrive when it was supposed to and all that. So the goal of automated collections is ultimately to reduce or maintain that debtors book to an acceptable level, right? Certainly when you're in the services and distribution sectors, you're going to have a credit term. So the whole goal is to keep that to a minimum so that you don't end up with a bulging debtors book that you're having to manage and start negotiating with people at the end of a renewal period. So it's to keep control on it. So that's one certain value of automating the collection side of it. The other one is time and cost savings, very much related, obviously. But, typically when we start talking to people about what challenges they have in their business and why they're talking to us, I guess, is that huge amount of time being spent on the phone to customers and sending emails, chasing, right? Getting in contact, sometimes not being able to get the customer or getting somebody else in the business. And that whole cycle goes on monthly, month after month, that continues on. And it certainly brings a degree of stress in a credit control team, having to deal with that all the time. And the other one that is part of this time and cost savings is matching credits, right? So without the likes of recurring payments coming in, when you send out an invoice, you'll get a payment into your bank account. Typically, the narrative won't be always right? Sometimes customers put your own name on it, right? We don't need to be told who we are, right? We know who we are, but ideally what you'd have is an invoice reference on the narrative so that you could easily match it. That doesn't always happen. So there's always a challenge in matching credits and allocations on your bank statement. So the whole idea, again, of automating the collections and recurring payments is to minimize that or remove it ultimately with recurring payments. Two examples I'm going to cover, EasyTrack and Cross Refrigeration. Different types of businesses, both in the services sector. EasyTrack has started out as a fleet tracking service, right, where they provide vehicle tracking to fleets. And Cross Refrigeration, a company that provides various different services, but the one that can easily be understood, I guess, is refrigeration units to various different types of businesses, spas and centres and hospitals around the country. So both with the same challenge in getting paid on time. In terms of EasyTrack, when I met Mark Egan, the MD of the business, they were starting out, and very quickly there was a lot of attraction, I suppose, to his business at the time. So it was growing, but they didn't have recurring payments in place, and it was a subscription-based model. And when I met him, he was carrying checks and cash. The bank was reducing the amount of time that you could go and lodge them. So it made total sense for him to sign up to a recurring payment model. And it certainly changed his whole game. He could then focus on sales and marketing effort and managing by exception when a collection maybe didn't come in for an account closed or insufficient funds, whatever that is. But it changed the whole game for Mark and EasyTrack. And, one thing I learned from them, I guess, and this comes up quite a bit, how do I get my customers onto recurring payments, certainly with direct debit? And, the guys in EasyTrack took a fairly firm stance on it. When they saw it working and they got the confidence in seeing it working, it gave them the wherewithal to talk to their customers, the few customers that were kind of resisting it. And we're saying, listen, this is how we operate. We're not going down this road of having to chase you every month. This is the way we want to do business. And, a little bit of firmness is required and sometimes required, but it was a great story there. They got people on recurring payments through debit pay and really gained from it. And then finally on EasyTrack, what they did was they branched into product sales as well. It allowed them, when they got this recurring payment service in place, it allowed them to take part of the payment up front, be it a credit transfer for the product they're selling, and then put the remaining of it on payment plan. And that allowed them to work with more customers, because the customers that they were working with didn't really have the wherewithal to pay for the product in full up front. So it allowed them to expand their business in that way as well. So it was a really good success story with EasyTrack. Cross Refrigeration, very much a similar case. Services sector, many companies or businesses across the country that they're serving, and service contracts was one of the first things they wanted to control, right? So they were contacting those customers monthly. Their credit control team were busy doing that, amongst other things, and it was very time consuming. And then the allocation of credits, as I mentioned, was another element of it that was clear in their problem statement. So they brought in the recurring payments for their service contracts. That's the first step in the whole change. And the result has been really, really great. They've collected quite a sum of money over the last 18 months through the system, which has been a great success. And they've also commented in terms of the payer side, which was a concern for us at the start, in that, introducing this change, it's a change in the business to bring in recurring payments and recurring collections. What they found, surprisingly, was there wasn't that much resistance to it. So it helped their customers as well pay them on time, and there wasn't that phone call or there wasn't that chasing. So two very good examples that really have gained from allocating or setting up recurring payments and automated collections. So just lastly there on this cross refrigeration example, where they have recurring collections set up with their customers, they don't have to edit the amount every month. So when they get the thing set up, it runs. There's no interaction on a monthly basis for set amounts. If they need to vary it, they can vary it. But they sit back, the system runs, it collects the money every month, and they manage by exception. Really, really automated for the service contracts. So it's really great. The how, very, very quickly, I won't focus on this. They set up direct debit through debit pay for recurring payments and fixed and variable amounts. They use paper mandates and electronic mandates. So when they're client facing, they pull out a paper mandate. It's the best time to do it when you're engaging with a customer up front, and get the paper mandate signed and then set up the collection afterwards. Or on the electronic mandate, it's basically set up the collection, the request goes out over email, and the customer clicks a button, inputs their details, including their bank account, and effectively approves the connection on their account. So both methods still very, very relevant. The final bit is reconciliation. Knowing who has paid you, and myself and Declan, we spoke about this as part of, I guess, the last couple of weeks. and the challenges in credit control, knowing who has paid you at all times is critical. The way the recurring payment model works is that you get a credit on your account and you know exactly who forms that credit. So if you're collecting from 20, 100 customers and it forms one credit, you'll get a unique reference on it, and that will tell you exactly who made up that payment on the incoming side. Allocation then becomes very, very easy because you have a report telling you who paid you and what it's for, and you can allocate it in your account system. And then exception handling is the last bit. In the case of direct debit, where let's say a payer has moved account or closed their account, or where there might be insufficient funds in the account, the bank would inform us that a collection has failed. Then we inform you, as in the merchant looking to get paid, what the reason for that is. So your timely information around a failure in collection, and thankfully the volumes of failures are low, but it allows you immediately to identify those payments that didn't succeed and engage with your customer to, agree the next period or the next date that you can collect, or do you want to roll it into the next month that you might collect on? So, but it gives you the information very easily and allows you to react on that. So last slide for me on this one is, on the reconciliation side of it, with the recurring payments through debit pay, the money leaves your payer's account and hits your account, the merchant account, on the same day. So let's say you're collecting from the 15th of the month from all your customers. Ideally, that'd be the way to do it. You don't want too many credits on your bank account. So let's say you have a bunch of credits coming in. You'll get one credit on your bank account, and it'll give you a unique reference. And we set the reference so we know what customers form that credit on your bank account. So you can take that reference and identify everybody that has made up that bulk credit to your bank account. So a very simple way, an efficient way of identifying who has paid you and who is not. So the summary, automated to get paid on time. So critical in the whole area of bringing your cash in on time. Save money and time with less stress. So it's about saving time and money in that regard. And then simplify reconciliation, managed by exception. That's all from me, Declan, on that. It's been a whistle stop. I changed it a little bit from what we discussed because I had a couple of conversations over the last couple of days since people started registering, and I felt that I needed to focus on one or two certain areas of it. But hopefully that's been of use and shared some information on the value of recurring payments and automated collections.
Yeah, absolutely. And just from a practitioner's perspective as well, Keith, one thing that you didn't say that I found in my experience, that the number of queries for direct debit customers reduces dramatically. I find if somebody has to make a payment or write a check and there's something wrong with the invoice, they're not going to do it. Whereas if the direct debit goes through and they don't get around to querying it, they kind of let it go. And I just find that back in the day, and I'm talking years ago, when I set up a direct debit system, I just loved it, and I just knew there was a pot of money coming in on the same day every month, which was well in advance of the month end. And I found that the customers who had signed direct debits with me were far less likely to query their account or to have invoice disputes or anything. And then this horrible chasing that you're talking about as well. So it eliminates all that. So if they haven't got the money, rather than fobbing you off for a couple of weeks, you know straight away there is an issue if it comes back for insufficient funds, so you can take action straight away. So to me, and the reason I'm with you here today is I'm a fan of the system, and anybody in credit control and part of the right first time, automate your systems as much as possible, and the more of the mundane stuff you can do, the better it is all around. So I would certainly encourage everybody on the call, if you don't have direct debits, get them, and if you do have direct debits, look at a better way of doing it.
Yeah, it's a fair point. And I guess in terms of the relationship thing, Declan, so when we started out in this, we talked about bringing the technology and making your processes simpler, if you like. But what we discovered from talking to people when they started using it was, it does become a relationship problem if you find a challenge, if things aren't working, or if you talk to people, and this is what we say to our customers coming onto the system new, that it suddenly changes it from, maybe not change it totally from a credit problem, but it brings it from a credit problem to a relationship problem, if you like, because if people are consistently not paying you and now won't agree to recurring payments of whatever value, then you have something to talk to them about. Is there a problem that you're not paying us? And that has helped people, certainly. And the other side of it, which we found useful was in the electronic mandate side of it. Some people, don't find it easy to chase people for payment and all the rest of it. If you send out an electronic mandate for signing, you can ring somebody and say, did you get the email? Have you any problem with the technology? Did the link work for you? And it gives you one less confrontational way of asking you, please sign the thing and I collect money from you. So I know people use that. I've seen them using it, which is really beneficial for anyone in credit control looking to get money in on time.
Yeah, I'm sure that's what it's all about.
One of the questions that I've been asked over the years is, I guess, it was around the exception handling with direct debit. And it's come up, and certainly the informed people around direct debit focus on this. And I guess it's the exception handling, the rejections, right? So you send out a bunch of collections to your customers or to the bank to process, and let's say 45 of 50 come in paid, if you like. I'm just using an arbitrary figure, if you like. But in terms of the next steps there, so for ourselves, we get a report file from the bank, and we break it down and advise the merchant as regards what has and hasn't worked. So it then allows that person in credit control to contact the customer and ask them, how do I, or when do we collect the next amount? And then it's a matter of jumping on debit pay and doing a resubmit, right? So it's not about setting up another collection. The process is designed to be simple. You resubmit the collection, be it for the next couple of days, or you can roll it into the following collection period. So it's designed to be as simple as possible. And that direct debit then will just process on their account depending on the debit date you specified. So that gets asked quite a bit in terms of how do we manage the rejections.
Yeah, and the only thing I would say there, Keith, you see, there's two things to play here. One is the technology and how the technology works, and the other is the credit function behind it. So while yes, you could, apply for the payment again the following month or whatever the case may be, my advice to any credit people who are watching here today is never to do that, because what happens is, like, by the payment being returned, you already are alerted to the fact that they're having financial problems. And if you continue to supply them for another month and hope that the two payments will go through next month, you're just asking for trouble. Now, look, of course, there can be, extenuating circumstances and all that kind of stuff, and a bit of intelligence is required. The fact of the matter is, if a direct debit comes back unpaid, that should be number one on your priority list for that day, to sort that out and organize immediate payment. Because, if they're not paying you, they're not paying other people. And this is how people, fall into insolvency. So just watch it, and, any of the payment failures. Now, look, we can all get a number wrong in keying in an account number or something, and obviously we have steps in place to make sure it doesn't happen. At the end of the day, if it's because of insufficient funds, credit control need to be wide awake and jump on that straight away.
Absolutely, good point. Great. And the other thing that, it was a question that came up last Thursday, actually, in prep for this. I was talking to somebody that I think has joined, but they were asking, and it's a question around the debit pay product, if I may, just for a second. And it's something that I took for granted, to be honest with you. But when they talked about, the question was more around the automation side of it, or the ongoing processing of a collection. So let's say you set up a collection for 5 months or 10 months or 12 months, or leave it ongoing, for instance, on the system. Then when it starts rolling, you don't have to do anything on a monthly basis. So, I shouldn't be surprised. I guess I'm very close to the product, I suppose, and we designed it that way. But it's a very valid question in that, what do I have to do? Because we do be asked, actually, when we put the system live for somebody, what do I have to do next month? And the answer is nothing, apart from watch your bank account and manage your cash coming in, get the reports, and make sure it's worked. It's the system will run on a monthly basis, and it'll just process the transactions. So if you're collecting, I don't know, 500, 1,000 euros, whatever the number it is, a month, it'll run monthly, and it'll collect the money, and it'll go directly into your bank account, and that's the end of it, of course, unless there's an exception on it. Just to mention that, because it was useful. It was a useful question, and it got me thinking a little bit more about what I should be sharing. Question here from Charlie. Thanks, Charlie. It's a great presentation, Declan, Keith. Thank you. Can debit pay be integrated into the cloud accounting software, QuickBooks, Xero, Surf? Delighted you asked, Charlie. Integration is very much on our roadmap. So right now we have our own API, but also a lot of our customers are setting up the collections on the system outside of their accounts package. But we've been asked more and more for it. So in terms of our roadmap, we have a number of things we're developing at the moment. We've upgraded quite a lot in Debit Pay over the last 12 months and more to come. But integration is a key piece for us as we go on in the next couple of months. So what I'll do, Charlie, is talk to you separately. Thanks very much for asking. Anything from your side, Declan, other than that?
No, I don't think so. Just to say to everybody out there, credit just doesn't happen by accident. You have to constantly work at it, constantly stay awake, constantly look for better ways of doing what you're doing. And I suppose if there is one bit of advice I can give people is not to just accept, oh, look, we always have 50 grand in our 3-1 column, or, no. One of the things is just to be a bit unreasonable from time to time and say, well, hold on a second now, these are our terms, this is when the money should be in. So if we give, end of month following terms, then when I print my ledger at the end of the month, there should only be one column on it, which is the current column. And, by setting your standards that high and then managing the exceptions, that's really what it's all about. So I would be encouraging, and certainly, when it comes to our students and stuff, I'd be challenging them all the time, never to accept, we're aiming now, look, we'll never achieve perfection. I know that. Let's aim for it and see how close can we get to it. And, and for that to happen, all the pieces have to be in place. Everything has to be running smoothly. It's always a challenging job. It's one I've spent my life working on. It's never easy, and it's a challenge for everybody every day. And I suppose that's what makes it great. And I think once you're part of the business and you get the recognition for the job that you're doing, you're paying the boss's wages as well as everybody else's, and they're relying on you to get the money in. And I think when you realize the importance of the role that you have and maintaining goodwill with customers and getting the money at the same time, it's a skillful balancing act. And anybody who's good at credit, it's a real talent, and one that I'm delighted to be promoting and helping people to do it better.
Yeah, and well said, Declan. And when I started Debit Pay, I guess I didn't realize it as much as when you start a business, how important it is. Good credit terms and getting paid on time, it's vital, right? It's great to be providing a service and getting feedback. Like I mentioned, those 2 customers coming to me, they didn't believe it at the start, and next thing telling me that look, it's working and it's working a treat. It makes it worthwhile, really. And I guess just to close on my side of it, then, what I'm getting from our customers is their confidence in going to their customers and saying, look, we have a process here that's working for us, and we want you to be part of it, right? We want you to sign the mandate. We want you to get up and running. And as long as you don't abuse it, right? As long as you maintain, good relations with your customers and just, collect what you're going to tell them you're going to collect, then it works a real treat, But to see people getting confident in seeing it working and then going saying to our customers, this is where we operate, it's a real buzz for us to see that working, to be honest.
Yeah, well, look, keep up the good work, you, and hopefully everybody enjoyed the 45 minutes, and they'll keep in touch, because I'm running all sorts of credit webinars, and there's lots of stuff coming up. So keep in touch with us, and if there's anything anybody wants, anything credit related, I'm always happy to help. Just to make them aware of that, and just give me a shout, and I'm here.
Perfect. And same as that, more than happy to help explain more about our system and how we help customers collect. And like I said, myself and Declan will drop out a line to everybody. Quick survey, really grateful if you could complete it, and our contact details on there, and get in contact with us if you wish to learn more from it. So it's been really good, really enjoyable, Declan. Thanks very much. Great to do it with you.
Yeah, you too, Keith. Well done, and good luck to you.
Smashing. Thanks, everybody.
See you, everybody. Thanks a million. Take care. Bye.